Hello traders and welcome back. It is Monday, June 16th, 2014. Great to be with you. This is Trading with Bill, Options and Forex, helping losing traders become winning traders. Hello traders, it is wonderful to be with you. It is cloudy, rainy skies for the last 3 days in Pattaya, Thailand, but we're coming live to you from the dark sandy beaches, and it's sunshine in my office. We're trading Forex. Here we go, and a little bit of options. And we're doing a lot of options coming up. Really excited about our options instrument, and we'll be talking about that in just a moment. Traders, before we get started, let me introduce myself to you. My name is William Gilday, and they call me Bill. And you can always join my website at tradingwithbill.com, or you can just hang out and check out my YouTube videos and subscribe, and they'll come right to your email box automatically. Traders, I've been trading from the year of 2006 and 2008. I retired from a wonderful career in the fire rescue department in the great state of Florida. Traders, 9 days after I retired, I took a vacation to Thailand. Came here for 3 months, and traders, I'm still here in the year 2014. And I have to tell you, I absolutely love my second career in the Forex and options market. It's exciting, it's invigorating, it's fun, I don't know, and it's profitable. If you do your homework, you can make some profits in this crazy market. All right, so that's a little bit about me, and yeah, I mentioned just a minute ago, it's been raining here for like the last 3 days, and they say we got another week of it. Oh well, what are you going to do? Swimming in the pool in the raindrops, no big deal. All right, let's get moving. Got a lot to talk about today. We might want a little bit overtime, but that's okay. But before we do anything, we got to take care of the legal stuff. Here is our risk disclaimer. Forex trading has a large potential of rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex and options market. Do not trade with money you cannot afford to lose. Traders, don't trade a live account if your financial situation doesn't warrant you to do that. Make sure you can trade comfortably and not be stressed every time you take a trade because of the risk you're putting on the table. That's it about the risk disclaimer. You guys have heard it before, and you'll probably hear it a lot more. Okay, what do you say? Let's talk options. Options. Okay. Traders, don't have a lot to say today on options. It's Monday. I will tell you that our simulated demo trade that we did last week on the S&P 500, which is the SPY, the spiders, absolutely worked out wonderful. On the simulated trade, we ended the week with $170 profit in that trade. Worked out very nice. However, it is Monday, and we're not going to enter into any trades probably on a Monday. We'll see how the market opens. You can take a look at this chart. We see that we have a big red candle. That line right underneath price, traders, is the 9 exponential moving average. So we just keep an eye on that. And the next thing is we are expecting this to gap up as Friday rebounded in New York, late in New York, and we ended up with a positive day on the Dow, the S&P. So we ended up in up markets there in the NASDAQ. So all good there. And we're probably going to start this week with a gap up. This was probably profit taking, and we would expect that on a Monday, as we saw that in the Forex currency markets also. However, let's take a look down the chart. I want you to take a look at that DNA indicator. Look at where the blue line is. It is pointing down. However, it looks like we are in the oversold area, and we're looking for this to curl back to the upside. Also, take a look at your MACD, and your stochastics is now kicked up to the upside. We have a little green line there. So I think we're going to gap up today when we get the New York Open. We don't have a lot of news data today. We have, I think it's CPI out of the U.S. and tick flow data. Sorry, we have CPI out of the Eurozone in the London session, and they don't expect a lot of movement there. And we have tick data out of the U.S. So not a lot going on today, news data-wise, typical on a Monday. However, I think the market is going to be lively. I don't think there's any reason to sit on our hands. I think we have some good trades coming about, and we're going to talk about 2 currency pairs in depth today. So that's what's going on with the options. I was hoping to get more education on the options stuff today, but it's taking a long time to get this put together for you guys. Of course, I got to get it so you guys can understand it. I can put a lot out there, but if you don't understand it, it's like useless. However, I am going to tell you that there's a website you can go to, and that's optionsguru.com, and check out this guy, Jeff. Really, absolutely amazing. If you can get some time and go to his website, and you want the CSS V2, and if you can get the information for that and the indicators for that, which would be the MACD and the Stokes that you see in my chart setup, he explains how to put that into your Thinkorswim platform. Traders, if you're not using Thinkorswim, you can probably do it on any of your options trading platforms. You just need to use his numbers and get these put into your platform. And I have to tell you the truth, I wouldn't know how to do that. I had enough just to get his stuff into my Thinkorswim platform, but it wasn't hard after I did my first one, so it was pretty easy. And I urge you all to take a look at the Thinkorswim platform. It is really a great platform to trade. And we're going live this week. We're going live. No more. We did 1 week of demos just to get my feet wet again, and we're heading to the live markets this week, and I'll have you a full review of that in about 24 hours. Tell you how it went. Okay, it's that time. Time for the Forex charts. Traders, we're going to start off with one of my mellower pairs in the Forex farm, and that will be the New Zealand dollar. This is the New Zealand dollar, and traders, it is bullish. Look, it took out the last high, and now we have that long wick right after where you see the end for New Zealand dollar. See that up there? That's our next target. That's what we're looking at. So it's probably gonna go back up to there, and we'll see what happens there, and just hang out. I mean, that's basically what we're gonna do. We're not gonna let anything get in our way. This is bullish. My bias is to the buy side of this, and we're gonna stay with it. We had a red day on Friday, and the reason we had a red day on Friday was position squaring, profit taking, whatever you want to call it. Traders got out of the market. The New Zealand dollar moved great last week. A lot of pips were made, and that's how it went. And of course, my news guy is now talking because I hit the record button, as he always does. He hasn't said anything in 2 hours. He's talking now. All right, just so you know who's on the background there. All right, let's go over to the 1 hour chart. Okay, we're going to really start looking into these Forex pairs in detail now, because we're going to move to the next level. The last couple of weeks, I showed you charts, and they were nice and stuff like that, but now we need to get down to the nitty-gritty, and we need to start really getting into what we're doing here. And we're going to do this ABCD pattern. And I have to be honest with you, I've been trading this ABCD since 2006, 2007. It's only been in the last 3 years that I've learned how to put it on my charts visually, and now I put them on my chart so I can see what's going on. So you can see A, that's where we're going to start this price pattern. It's going to go to B. Price is going to move up to B. So the AB is set in stone. That's on your charts when you open your chart up, right? The problem is a C. Where are we going to buy this? Where are we going to take this back to the upside? Well, you want to take it at C. So we're going to look for a bullish formation, and we want to buy this. Where do we want to buy this from? We want to buy it from the 8.3 fib all the way down to the 2.3.6 fib. Anywhere in that range, we can buy this with a bullish candlestick formation. So when I took this shot of this currency pair, it really had come down to the 7.4 fib level. And sorry about that noise in the background there, traders. The one time I forgot to turn my cell phone off. Okay, it's all right. It's just me and you. We're friends. It's okay. All right, so what we want to see this pull back to C, and you notice C has a question mark because we really don't know where C is at when we get to our charts, when we plot this on our charts. However, we do know where D is at, right? We know that's at the 161.8 Fibonacci level, and that's our take profit area, and you can see where our stop is. It's right below A. So stop is always below A, D is always our take profit area, and C is where we're going to enter into the trade. So this actually came down to the 7.4 fib already. So now we're waiting for it to pull back because this came down before I was at my charts. So we're going to wait for this to pull back, and that's okay. And we're going to get into the trade. And if it doesn't work, that's fine too, right? So we have other time frames. We could do other things. So talking about other time frames, let's go and check out the 15-minute chart and see what's cooking on there. Really nice. Simple, 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 right? This one we have, it has not. Well, it has. I take that back. It has. It actually has spiked, it looks like. pretty much down there, didn't it? Yeah, almost to the 50%. So no, not quite. So yeah, this did pull back, and now we'll see. Now we are in the zone. You see where we have the entry zone there? I'm going to put that on the charts from now on until you guys get this down. When we get this down and you have this entry zone in there, we're going to stop putting it on the chart. But for visualization purposes, we'll keep putting the entry zone in there. Also, I will always put the ABCD, the stop, and the take profit area on the charts. You notice the stop. The stop is below the 23.6. Now, this stop's a little bit farther. It's below the 200 exponential moving average. Why? Because that's massive support. Why wouldn't we put a stop below that? Okay, the next thing is look at C. That's our entry zone, and it's there. So we're now looking, and we're in the London Open. We're about 10 minutes into the London Open when I'm recording this, so we're ready to go. We're just waiting for a bullish candlestick formation. We want to take this up. We got some stumps in the road, and we got some areas we got to watch for. We got R1. See where the profit zone is with that little turquoise circle there? Yeah, look at right below it, R1. That's a reversal pivot point, so we need to make sure we're break even by the time we get there. So, to tell you the truth, traders, I'd like to see this pull back some more, and we can get into this trade. But that might not give us the opportunity. This just might continue to go. But hopefully we can get this to pull back some more. If not, we're going to take the trade. We're going to put it where it needs to be done. Even if it doesn't pull back, we're still within our risk-to-reward tolerance area, and everything is a go for this one. All right, traders, let's take a look at all three charts put together. All right, here we go. This is the daily chart. Check out that. Is that bullish? Yeah, that's bullish. That is on the move. And you can see where Thursday, that was that big blue candle on the daily chart, and that's when they upped their interest rates by 25 basis points, and boy, the markets ate that up. And they were expecting that, but the markets really ate that up. Take a look at the 1 hour, as we talked about, and the 15-minute, and we are in there, ready to roll. All right. So, I did not have deviation levels on this. They don't do deviation levels automatically on the New Zealand dollar. So, we didn't have deviation levels, but the next currency pair, we do have deviation levels, and we'll talk about that when we get to it. Let's get to the next pair. And traders, I couldn't turn this down. I had to go with it. Let's talk about the Aussie dollar, our commodity pair. Have a lot to talk about on this Aussie dollar. Sit back and relax. All right, it is bullish. I've been saying this all the time. It was never in a change of trend to the downside. It is bullish. It hasn't even come close to taking out the 200 exponential moving average. It's touched it to the pip, could not break below it, and this is strong support. That 200 exponential moving average. It remains bullish. It is bullish. We want to buy it. What else can we say about the daily chart? That's what it is. All right, here we are. This is the 1 hour chart. Now, I want you to look left of the chart to the first day, all the way left of the chart. So we have two setups. The setup to the right, closest to current price action, is today's setup. The price action before that is Friday's setup. However, let's take a look at the first fib, the A, B, C, and D. What happened here? We have AB is in place. It did pull back, and it pulled back nicely, just about to the 23%. But the problem is that happened today. But it did not pull back. Well, it did pull back. It almost came below the 7.4, so we could have taken that to the upside. However, I wasn't at the chart, and I wasn't looking at trading this pair that day. The reason I put this on the chart today was, look at the D take profit, the 161. It's above today's. Why? Because today has consolidated candles, and there's not a lot of range there. So I wanted to get another take profit area that we can look at. And traders, we're still in the same zone for the C on the first setup as we are now into the second setup. So let's take a look at the second setup. Remember, our AB is there, comes back to C for the retrace, and now we're looking for the bullish candlestick formation. Currently, we're looking for it, and we're going to take this to the upside, whether to the 161.8 Fibonacci level, which is going to be R2, and we're probably not going to break R2. It's a major reversal pivot, and also this is on the hourly chart. So 99%, I would say, we're going to be getting out of that trade probably before that R2 level, and once we start to see the bears taking control again, we'll get out of that automatically, just get out. So this is really interesting. So we got a lot here. I know there's a lot on the chart, but if you can just understand it, and you know what you can do, traders, if you took a line from the first A that's left of the chart to the second A and put a trend line up there, Traders, what are you seeing there? We're seeing higher highs and higher lows, just knocks more into the wood that we are bullish in the Aussie dollar. Why does it do crazy actions? It's a commodity pair, traders. It's a commodity pair, and that's why we see the fluctuation a lot. But on the whole, this pair is absolutely bullish. Traders, let's go to the 15-minute chart. Nice setup we have here. We've got an A, B, C, and C is at a perfect level here. You can see the little green arrow. I want to take this to the upside. I'm just waiting for this to give us a bullish candlestick formation, and we're going up. But the pullback is great on the 15-minute. Traders, this chart, this slide was only taken maybe 15 minutes ago, if that, maybe 10 minutes ago. I just did this. This is current, and we're in the London Open now, probably about 20 minutes, right? And we're ready to go. Well, to be honest with you, we're actually 31 minutes into the London Open, and I just looked at my clock. We're 31 minutes into the London Open, and so we are at current prices. We are ready to go. We're ready to take this thing to the upside, and I'm excited about taking this pair long. Where's our stop? Below the 23.6. B, look at where B's at, the deviation level. Remember, traders, you can go to Apex, A-P-E-X, investing.com and check out on the right side of the homepage, it says deviations. And you can look at deviations and get them put onto your platform. You can do it manually for free. If you have the NinjaTrader platform, which I strongly recommend as a professional trader, and you are a professional trader, part-time or real-time, you want deviation levels on your charts. If you do it for free, you can do that really easy on MT4. Just copy them from his site. He puts them on his site every day so you can get those deviation levels into your platform no matter what you're using. Or if you have NinjaTrader, you can pay $30 per month and you can get them. They will come on automatically onto your charts when you turn your charts on if you have the NinjaTrader platform. Okay, so this is a great setup. I think this is probably one of the best setups out of all the charts we looked at. I think this is really the best. Look at your Williams R percent indicator on the bottom of the chart. This thing is pointing down, right? This is aggressively pointing to the downside. That's okay. We don't have a problem with that. Remember, what is the saying? The saying is, if it does not take out A, it will go our Fibonacci way. So as long as price does not close below A, we're in the trade, right? And you know what? The farther it pulls back, the less of a drawdown we have. So it's all good. Traders, let's go to the last three charts put together. And this is just a beautiful setup here. This is what you want to see. This is what we want to look at. This is just really nice. You can look at that in a flash and see what's going on with your chart, see what's going on with your trade, and it's right there. And of course, I've got trading with on the bottom of it, but we're helping losing traders become winning traders, and that's what it's all about. You helping me helping you, and we're gonna have a great time. Traders, we really went over today, but it's a Monday. We have a lot to talk about, and thank you, my friends, for being with me and watching. And if you would, subscribe to my YouTube channel, and you can also get this in your email every day. And of course, if you like it, you don't like it, you want to place a comment, I encourage you to do that because we just want to make it better. If there's something we can do to make it better, I'll do it for you. So let's trade smart and not hard. Take care, traders. On a Monday from cloudy Pattaya, Thailand. Take it easy. Bye-bye.